Welcome to another episode of Behind the Business presented by Gore Mutual. I'm your host, Ian McLean, President and CEO of the Greater Kitchener-Waterloo Chamber of Commerce. This podcast is recorded on the traditional territory of the Neutral, Anishinaabe, and Haudenosaunee peoples. Each week I sit down for candid conversations where we go beyond the boardroom and behind the business to uncover the real stories of Waterloo Region's business community. Today, I'm delighted to welcome Andy Taylor, President and CEO of Gore Mutual Insurance Company, and he's joined by Neil Parkinson, Chair of Gore's Board of Directors. Built on a foundation of financial strength for more than 180 years, Gore is one of Canada's first property and casualty insurance companies. They're deeply rooted in community and are driving bold change with their intention to merge with Beneva, bringing together two well-established, financially strong, trusted brands to reinforce the meaningful role of mutuals in the Canadian insurance industry. Since 2020, Gore has advanced its Next Horizon vision, evolving from a regional mutual to a purpose-driven, digitally led national insurer, with the merger poised to accelerate growth and profitability. In this conversation, Andy and Neil share their perspectives on leadership, transformation, and the bold steps Gore is taking to shape the future of mutuals in Canada. We'll explore how Gore is navigating technology, talent, and innovation, the importance of fostering a culture of spreading good, and how community partnerships from local hospitals to ambitious climate initiatives are influencing strategy and impact. Let's go behind the business with Andy Taylor and Neil Parkinson of Gore. Well, Andy and Neil, thanks so much for taking some out of your busy schedule. We're excited to have you here today to join us and really explore what's happening at Gore, which is exciting for the region. Thanks for joining us today.
Great. Thanks
Ian.
for the opportunity to be here too.
So, Andy, you were initially recruited, so I want to kind of go with the history of the two of you, and then kind of come to the present of what's happening with Gore, which is, again, as I say, a welcome development for Waterloo Region. But you were recruited to Gore as part of a long-term succession plan for the CFO role, and ultimately to take the helm as CEO in the middle. And you joined, and that process sort of was smack dab in the middle of a global pandemic. If anyone remembers, we went through COVID. Walk us through that transition and what it was like stepping into the CEO role during what was obviously unprecedented and uncertain. It doesn't even do justice to what it was. What were the biggest lessons you carried from being in that crucible of change and crisis?
Yeah, it's quite an incredible time, Ian. I think we talked about it, at the beginning of the transformation. But I went home for Christmas, came back excited about the new role, coming in as CEO of Gore Mutual. And as you said, this year marks 20 years with the company. So I'd been with the company for many years. I was the CFO for close to a decade. I'd led the strategy. I was excited. We were just getting ready to kick it off in early January. And as you say, the pandemic hit. And it was quite incredible because we had hired quite literally hundreds of new employees to work on the transformation. We had consultants lined up. And then, as you know, the whole world sort of started working from home. And I guess a couple of key things I learned that I still carry with me as a leader today. We had a decision point early in that process. Do we actually keep going, right? This is a major program we were on. Do we actually stay the course to our strategy, or we could have actually paused and said, there's a lot of unknowns right now. And again, I'm very proud, but at the time we decided and, spent a lot of time with our board talking about it too, was, not only should we keep going, but we should accelerate the work that we're doing, take advantage of the environment that we were in, which ended up being amazing because we were so internally focused, working from home and doing all the things we were doing during the pandemic. We were able to actually move faster through the transformation. So I think the first thing was that staying true to your strategy, even though you're getting sort of curveballs thrown at you. And then I think that the second one was, it was always obvious to me that the talent would be the sort of reason for why we were going to actually be successful. But that just resonated so strongly throughout the pandemic. We were able to attract new talent to the organization. We had a hybrid model that we had opened up, which unlocked our ability to attract new talent with the strategy. So I think those two sort of lessons I still really lean into today, like staying true to the strategy, because pretty much every year that I've been in this industry, there's some sort of a crisis
Oh, yeah.
that's going to come at us. That year it happened to be the pandemic. As you know, this year we're dealing with tariffs and all these other things. But
Yeah.
those two principles of getting great talent and staying true to your long-term strategy has really boded well for us.
And that was one of the things that at the start of the pandemic, and I met with my board and said, geez, what are we going to do? We had no idea what the financials were going to look like. It said, the only thing we have is the people that served our 1,600 members when they needed help the most. And so kind of sticking to that we're in service of the business community. And that's wise. Those that didn't do that and didn't invest in their people and keep their people, I think are paying a price for not having done that during the pandemic. Neil, you've been, and I will say, I'm going to be polite about saying this. You've got 4 decades, even though you look like a young man, 4 decades in the financial services and insurance sector, and nearly 5 years as chair of Gore's board of directors. And you had a front row seat to the organization evolution, not only the pandemic, but again in this transition with Beneva. Walk us through what originally drew you to Gore and how you see the board's sort of strategic mandate shaping the organization's direction, because it starts with strategy, but it actually has to hit the reality of how to run a business.
Well, first of all, you're a sweet-talking devil. It wasn't just 4 decades, it's been 5.
5 decades, see?
Next month will be the 53rd anniversary of me walking through the front door of Gore. Wow. As a first-year co-op student at University of Waterloo, where I was working for KPMG. The audit firm I was with after that for a long time. And so I've been involved with Gore continuously since then, as their external auditor, as an advisor in a lot of ways, then as a policyholder as well, remember, throughout that. And really in the last 9 years on the board of directors, the last half of that as the chair. So it goes back a ways. So I'm not sure I chose Gore so much as maybe they chose me, or that I was around and they didn't know what to do with me. So I guess... you're right. It has given me a lot of perspective, as well as an affection, obviously, from the organization. I've had the privilege of working with a lot of really fine people at the company, but also on the board. Some really impressive people, both locally and nationally. Important figures, and that's been one of the things that's really kept my interest in wanting to be involved with the company, and given me a real emotional stake in its success, I think, too. You asked about, the board's strategic approach and vision. And sometimes boards might seem to, ask management to come back with a strategy, and they get a bunch of 3-ring binders, and they say, nod sagely and say, yeah, I approve that. But that's not the right thing to do from a governance perspective, and it's not what our board did. In fact, throughout Andy's tenure as CEO was really when we really took a hard look at strategy, and the board was very much involved before we got to the point of forming anything that could get 3-hole punched and shoved in a binder. So we really did look at the basically what our strategic options were. It was a very collaborative effort throughout, and I think it was a much better product as a result, as well as being a lot more interesting and satisfying for directors, and I think for management too. Boards can be useful, and I think our board was. So we looked at a lot of factors, the changes in the competitive environment, the consolidation in financial services, and particularly in insurance, how the distribution system, all the brokers and so on we deal with. Also issues about scale of operations and efficiency, and diversification risks. We all watch TV and see fires, floods, think about earthquakes. Fortunately, haven't had to see them locally, touch wood. But those have all been these drivers to thinking about what the right thing to do is, and I'm sure we'll talk about a lot of that and the rationale for it. But it was really good for us, having explained all those drivers and what the preferred approach was for the company in our view and management's view. There's really, good and affirming for us to get the members vote 95% in favor last April, and more recently, close to 98% in the final vote on the merger process. So we hope we've got it right. We hope they aren't wrong too in supporting us. But I think it's been a great process for all of us.
Yeah, and I think one of the things is through that process, 180 years old as a company, and then taking, I wouldn't say it's not a totally new direction, but it is a significant shift, which and it takes both sides. It takes the strategy and the board, but it also takes the team figuring out how you're going to execute on that.
Yeah, I was going to build on Neil's comments. I mean, I've mentioned this before. A company that's today 186 years old, but 180 years old. There was something unique about the dynamics of the board that we had at the time, the leadership team that we had at the time, that had that combined view to say, okay, the question we asked at the beginning of this was, how do we make sure that this company's around for another 180 years? And I think that's a unique question that I think comes rooted in our mutuality. And Neil talked about our passion and care for the company. I mean, when you work there, you truly sort of fall in love with the organization, the impact we've had in the communities that we live in. So there was a sense of duty, I think, that we as a joint leadership team and board felt to usher this organization into the future and protect that heritage and history that we've had. But that's not always the case in every organization. So I think we're very fortunate to have the right mix of leaders at that time.
So let's get to that. Earlier this year, Gore announced Gore Mutual and Beneva, which is another major Canadian mutual insurance company based out of Quebec, proposed to join forces. And so talk a little bit, Neil, about the why this is such an important step, because mergers happen all the time, but this one is, I think it's unique in some respects. Tell the story of why this is an important step for mutuals in Canada. So not just for Gore, but for Canada, because some have demutualized. There's global forces in insurance, whether it's casualty, property, in the whole insurance sector. And how the partnership between Beneva and Gore will benefit customers, but also the local community. Because I would logically be a fear that the community would have, and I think we're seeing lots of evidence that it's going to pay off for Waterloo Region, but also for Ontario and for Gore as a brand beyond the borders here.
Yeah, and it is quite normal for. Not just for mutual companies, but certainly that's been a common feature when mutual companies looked at merging with other mutuals or doing anything else. If you're concerned about, are we losing our identity, our local presence, our name change could be sensitive. But increasingly, mutuals that have merged have done things that maybe if they have a name change, well, they're probably adopting a name that is more about what kind of company they are, who they are, as opposed to where. And, we've become over time, over those 180 years initially, it was all pretty local.
Yep.
And now only about 8 or 9% of our policyholders and members are within, short driving distance of our head office. So obviously we have a little broader scope, not just in Ontario, but across the country. So I would yield to no one with 53 years and having a sort of an emotional stake in the company and everything else. But we do think it's the right thing, and we'll talk a little bit about why. But I should also say that, today is kind of important because yesterday was a day in which the last legislative change was crossed. So it's not just intention to merge. We are merging on January 1st.
That's new news to me. Yeah.
So all the legislation.
Breaking news here on the Behind the Business podcast.
You're the first to hear this.
Yeah. So why is it important? Well, for mutuals, we really think very strongly when you look at both Beneva and Gore, we're mutuals. We're committed to mutuality. Could you convert to a stock company, particularly when you're bigger? Maybe, but we don't have the intention of doing that. Neither does Beneva. And we think that the mutual model offers a lot to our policyholders, both the ones we have today and our future policyholders, the ones we're going to sell to or bring in to the fold in future. The result of this merger is we formed the largest mutual in Canada. Pretty good big, hefty balance sheet that makes us a powerful competitor, and allows us to bring a mutual option across Canada. Right now, we're a little concentrated, us mostly in Ontario and British Columbia, a little bit here and there, Beneva principally in Quebec, and a little bit in New Brunswick. This allows the organization, will be the spring pad for our springboard, I think, for taking the whole organization across like Ontario, Atlantic, and the West. And I think providing that mutual option to people is kind of an important one. And honestly, it's never been a better time to be a very Canadian company.
Absolutely. I mean, if we go down that rabbit hole, we won't tell the rest of the story. So.
But for current and future policyholders, there's the efficiency arguments of putting the organizations together allows us to be a lot more efficient on cost and service, provide a range of products that maybe we don't all do right now. And importantly, diversification. I already touched on, the fire, flood, and earthquake issue. You can be really unlucky if you're too geographically focused. And when you're more diversified, you can cope. It's a lot better safety and security for our policyholders. From our community's perspective, this is a great opportunity for us, particularly with this particular merger partner, to really secure our presence in the local community in Waterloo region, although the office is in Cambridgeshire, but we draw employees from everywhere in the region. And that secures not only our current employment, but a lot of really great opportunities for employment and employment growth into the future.
Andy, one of the things, just building on that, I mean, what's the difference as you're selling through your broker network, et cetera, of the mutual model versus the more stock based or commercial a different commercial option that you'd see with other carriers?
It's a great question. So in a couple of building on Neil's comments, if you look at the industry overall today, most of the largest competitors are not mutuals. So there's only a few mutuals in the industry that have scale, and now with Beneva, we become the largest in the industry. But brokers' primary focus is to have choice for their customers. So they're looking to have a diverse panel of insurance companies. So when a customer comes in, they can get them the best coverage, the best price. So choice and diversification of the panel is important. Having mutuals in there, and why brokers and customers love mutuals is because of the stability of the mutual market. So we are there, quite literally for 186 years, right? We have been in the market, and we'll stay in the market. Mutuals can't be acquired because there's no shares, so there's a stability that comes with that. Now, there is a lot of consolidation. One of the key drivers for our merger is consolidation of our competitors, and when other competitors consolidate, there's fewer markets for the brokers to actually sell products to. So a healthy market for the Canadian insurance company industry will be one that's diverse, but has strong mutuals as part of that panel, and that will give stability to the brokers and to customers in Canada.
So with the proposed merger, I mean, one of the things, and we talked about this when this was first an idea, I don't know, over a year, 2 years ago?
This has been 2 years in the making.
2 years, yeah.
Sort of this merger, 5 years, the whole strategy, but yeah.
But one of the things that you talked about, and I think has been going around, is how does Gore maintain the culture and the heritage of? I mean, we were talking about your gorgeous building in Cambridge. It is historic. The company's historic. The building's historic. How do you maintain that culture and heritage of what Gore was when you are merging with another company? Now, great fit, but there'll be still two different companies coming together.
Yeah, great question. I think first and foremost, that was a principal objective, going into this when we set out with the board to say we have a lot of options on the table. The company was growing, it was profitable, so we were actually doing this from a position of strength, so that we would have options and we weren't being forced into a transaction. We knew that if you're merging with a larger player, it's even harder to do the things that you just talked about. How do you preserve your heritage when you're merging into something large? And so I think it started with the values alignment. So it really is, when you think of merging mutuals, it's two people. It's like getting married, right?
Yep.
Nobody's buying anyone. Has to be in the best interest of both companies. As Neil said, both sets of members have to vote on it.
Yeah.
The employees have to support it. So we had to figure out, how do you actually find a solution that meets that criteria? And a big part of it was, how do we maintain our sense of identity, our heritage, our history? So a couple of ways we've done that is, there's a shared vision around the future of mutuality, being a high-performing mutual, being the top mutual in the industry. I think that's the first piece. But the second one was, there was a really high level of respect from Beneva and our partners for our heritage and history, and they understood and appreciated why it was important to us. They actually spent a lot of time with us, coming to Cambridge, seeing our office, seeing the history, and really understanding why we would want to preserve that. And that wasn't the case with all the players that we talked to, right?
Mm-hmm.
Not everybody had that same sense of values. And then from there, we structured a very unique merger where we will essentially be a subsidiary of the larger group. So by doing that, we're going to merge Unica, which is one of their existing subsidiaries in Ontario, into Gore, create $1 billion subsidiary outside of Quebec that, as Neil said, will be the platform for growth outside of Quebec. But the subsidiary itself, and having a separate board of directors that Neil will continue to chair, and we'll have a majority of our board will be represented on that board, really gives us a separate and distinct identity. So that was an important part. And then second, we actually have embraced the concept of taking on the Beneva brand nationally, for all the reasons that it's exciting. It's a new brand. It actually stands for people looking out for people. So it's very much aligned with what Gore is all about. And we see it's powerful to have a national brand and be part of a national financial services group to compete head-to-head against the multi-billion-dollar organizations we're competing against. But you can do that while preserving your heritage and respecting it. And so some of the ways we're doing that, you referenced our beautiful building in Cambridge. That's actually been designated a heritage building. So that building will be there forever. We're actually rebranding we call it the campus because it feels like a campus, and so it'll be the Gore campus. We have archives in the building and tons of history, so we'll be celebrating that, making it available and for our employees and others. And then we're also looking at also ways through our foundation. So how can we actually use the foundation to continue to have an impact in the local community and celebrate our heritage? The other one's interesting is culture. So we're working with our employees and actually doing surveys with our employees to say, what is it about Gore that you love? Like, what is it that's great about this company? And we're also asking Unica and Beneva, and we're going to create, what we think
best
is a
of the
new
best
culture. Absolutely. That has the best of both. So it will be different, but hopefully we can bring along a lot of what's made this company so amazing in the past.
And, there's a bit of a proof point there, because it would be natural to be skeptical that, of course, it's it's romance stage. You haven't got married yet, So the proof points is when we look at how Beneva itself arose, because it's only 5 years ago that they created that company out of the merger of two companies like Capital and SSQ. And so we could look back and say, well, how did they behave? Was there kind of a red and tooth and nail type of conventional kind of a corporate merger, or were there winners and losers? And no, they were very reluctant. It wasn't the tech thing about move fast and break things. It was, I don't want to break things. I don't want to, hurt anybody's culture. Continue to recognize and respect those things. So we have a lot of confidence that that's in fact how things will go beginning Jan 1.
So in 2020, I guess around 2020, the next horizon vision. So that was Gore saying, what's the start of this vision that you talked about? What has been on a journey to become, and you've talked about this little purpose-driven, digitally led national insurer. And I would say the insurance industry and digital have not always been used in the same sentence very often, because it is a very traditional business. But what's most excited you, Neil, about the journey that you're on with the merger, but also this next horizon journey? Because it is a new way of doing, and not fully, but there's a large parts of this. There are new ways of doing business in the insurance field and with this merger in particular?
Well, particularly when I think back, the 5 decades I talked about earlier, I mean, the change in the company over that period has been nothing short of breathtaking. But even on the last, 5 to 10 years, that's been the case. Part of it's technology. I mean, it's really, there's the cool factor of building a new technology stack. To sound like I know more about technology than maybe I do, but that's been very dramatic and very impressive, and the kind of thing you read in my Harvard Business Review magazines and stuff like that. But I think that one thing that was really great watching the transformation efforts take form and take root in the company over the past few years is the recognition it's not just about things you plug into the wall. It's about the people. And so through that period, we've seen a real upwards movement of our skill set inside the company, hiring best-in-class people. A lot of people from very large organizations are more than willing to take a look at Gore as an employment opportunity and have done so. And a lot of people are saying, gee, having experience at Gore on my resume is not a bad thing, even if I don't stay there forever. So that's been really good. I think that the capability level and the degree of engagement and excitement in the employee base is the thing that's really excited me. Another, and again, I talk about proof points now and then. If you look at how the company has changed, one of the threats we recognized over the past few years was if you look at distribution, most of our distributors were, what you call strip mall or local or family-owned brokerages. And not to knock them, it's just that we were a little worried that our distribution system was getting bought up by consolidators and turned into larger brokerage chains. Would we have anybody left to sell our policies? So we actually worked really hard at transforming our distribution to include, the national level distribution organizations who are quite demanding, and that's fine. They should be. I think it's helped drive a lot of the progress we've made. But I was surprised. In retrospect, if you'd asked me 5 or 6 years ago, would we be where we are in terms of our ability to serve some of these large national brand distribution, I said, gee, that's pretty ambitious. Don't think we can do it. We've certainly done that, as well as maintaining our involvement with the smaller local brokers. So those have been some of the big things for me.
So just sticking with the next Horizon journey, starting in 2020, Andy, how has it shaped Gore's position in the marketplace? I mean, you and the administration team and the senior management team have to deal with the realities of how does the strategy actually coming off the page. How has it shaped Gore's position in the marketplace, and what do you see as what has this produced in by way of both opportunities and challenges that you'll be able to experience in the years ahead?
Yeah, great question. I'll probably build a bit on Neil's comments, but if we go back to 2020, 2 or 3 key trends in the industry really led to Next Horizon. The biggest one being that consolidation of our broker partners. So that was happening. Our competitors were consolidating, and we were unique because we're a mid-sized player competing against the largest in the industry. And then climate change would be the third one. So, we see it in our everyday life, but we'd seen record catastrophes across Canada consecutively for every year. For Gore, 186-year-old company, we were seeing record losses ourselves each year. And as Neil mentioned, as a regional player, we were concentrated in certain areas, so we were not diversified, and so we would see more volatility in our results. So those were kind of the drivers to say, okay, ultimately what the vision for Next Horizon is, we need to get to a point where we have scale, diversification, and access to capital to really thrive in what we think is the future of P&C insurance in Canada and nationally. And it's going to be harder and harder for those smaller regional players to actually compete in this landscape. So today, fast forward kind of 5 years, I couldn't be prouder, and I think we couldn't be prouder of the work that we've done as an organization to build a foundation for that. So that first transformation, which we did during the pandemic, 2020, 2023, we have put industry-leading technology in place. The entire organization is now on the most modern cloud-based platform in the industry, and that really enables all the work we're going to be doing in data and analytics and AI. Our operating models are scalable today. So at the beginning of this, very manual. Today we have straight-through processing, direct connectivity to our broker partners. So as we merge with Beneva, we can scale the business across the country. And then similar to Neil, most exciting has been the talent elevation in the organization. We've quite literally doubled the size of the workforce, access to talent all across the industry. So I would say that's kind of foundational. So if those three trends that I talked about, not only have they continued through the 5-year period, but we would argue they've accelerated. Back to that earlier comment that it's really important that we did the work that we've done to get us to this point. I think the opportunities, the challenges, those are going to continue. So consolidation, climate change, these are real issues for the industry. The opportunity is we now feel we're positioned to actually really, really perform well in that environment, and particularly as part of Beneva. So if we've done that work ourselves, combining with Beneva, now we get to be an $8 billion organization. Within that, there's a $3 billion P&C business. So that makes us a top 10 P&C company in the industry, and part of a diversified financial services group that has P&C, life, and group insurance, which is another factor that we really loved about the Beneva group, because as one area of the business might be under stress, the other areas are contributing. So we feel, sort of optimistic. I think the reality is it's going to be a very tough environment to be in the P&C insurance industry. But the work we've done to build that foundation, get the diversification, have access to capital really bodes well for us in the future as we kind of.
I think that's a metaphor for lots of industries in Canada. I mean, productivity, efficiency, investing in technology, AI have got to be at the root of. For many companies, we're on the global stage. We're not big, so we better be pound for pound making those investments. And it sounds like you have. The Behind the Business podcast is made possible through the support of our title sponsor, Gore Mutual. Proudly Canadian, Gore Mutual has stayed true to one purpose for more than 185 years: insurance that does good. It's the reason they exist. They believe that when we focus on being good, doing good, and spreading good, we all thrive together. We're grateful for their continued commitment to our local communities and the positive impact they make every day. For more information, visit goremutual.ca. Which brings us back to insurance is still a very, very highly regulated. It's, regulators in Ottawa and provinces for that matter. So there's lots of regulation, but you have made some bold moves in digital transformation and customer experience. And I mean, I think during the pandemic, some of the things that came up is like you still needed to get your actual, pink slip for car insurance, like things like that became more problematic when we could not be together. So talk a little bit about some of those digital transformation and customers. Like, how would people experience what you've done in Gore to make their life easier, make the customer experience simpler and more easy? Because I think that's one thing in banking, in insurance, that everyone is, and they're very traditional industries, everyone needs them and they want them to be as seamless as possible.
Yeah, 100%. And I think you mentioned it earlier, and I think it's a fair challenge to say the insurance industry hasn't always been seen as catching up to some of the other industries, but it's been amazing. I do think if you look at a sort of a change curve, and Neil mentioned this, tremendous change over the last 20 years, but like exponential change in the last 5. And I think the next 5 will even be more impressive in that. So I think, when we think about regulation, we are a regulated financial services industry. I think that regulation is important. We need to have guardrails. It's been one of the challenges for smaller organizations. How do we actually balance that going forward? But I think you're right. Like, innovation is really starting to take effect. So we all know that in all of your other areas, you're interacting with your phone. One of the challenges we had is if we sell our products through independent insurance brokers, or you could buy direct to consumer. So direct to consumer experience is typically more digital, has other challenges. Probably the biggest game changer, I think, in the coming years that is really coming on now is the brokers and carriers' ability to provide that, as you say, digital experience, even on that side. So I mentioned earlier, we're on the most modern cloud-based platform in the industry. There's been a conformity. So the industry overall is on one platform that's connected to those brokers, which then allows the brokers to provide a faster, more seamless experience for customers. So even today, I buy my insurance through a broker. All of my documents come through my phone, my pink slip. It's a digital experience. That capability wasn't there 3-4 years ago. So that's really happening quickly. And then I think the game changer going forward is AI, not only obviously in every industry we're trying to explore, the specific use cases. One of the challenges in insurance is there's tons of unstructured data. So you have structured data, it's quite easy to automate something. Unstructured data is difficult. Yeah. We're getting submissions and applications from customers all across the country. So there's a huge opportunity, I think, again, to use AI to really improve customer and broker experience. But I would say that the challenge is fair. Like if many other industries are here, we're catching up, but there's an ability now, I think, for the insurance industry to really be at that.
Well, and I think one of the advantages of having Gore stay here is with Communitech and with the tech sector here. I'm part of a group, the Waterloo Region AI Coalition, very exciting title. But really what it is saying every sector is touched by AI, and how can we do pilots to take various sectors, whether it's insurance or banking or services or retail, and harvest the productivity and the things that AI can provide for, especially small and medium-sized business, where that can make a difference. So there's lots of interest, particularly with the advantage of having Communitech in that tech space here. Listen, let's go back to Waterloo Region a little bit, Neil. Gore has supported initiatives and has always been a community leader on things like climate, and there's a business reason why climate change and the weather events, etc. Equity Lab and the local hospital. I mean, maybe talk a little bit about those partnerships or those investments that you make in the community, and how it influences the strategy as a company. I mean, you've got employees here, but showing leadership where you're based and where your employees live their life it keeps you connected with community. But talk about maybe those specific things that you're investing in, locally.
Well, if you think back to that discussion of transformation over the last 5 years, we've heard some really impressive things that are very businessy oriented, let's say. But through that period too, we made a significant investment in time and effort, a little intellectual capital, in what we would call a purpose strategy. And we've got a very senior person we recruited from one of the other major financial institutions to lead our purpose initiatives. And so we've done some pretty cool things. If you look at our, basically our impact report that we do separate from our business annual report, there's one that talks about the things we do in the communities, including climate, and give you a pretty good, it's in its own way as important and done as the same sort of standard as our annual report. I think that looking at purpose has influenced strategy, partly in the sense that it kind of reminds us that we work for all our stakeholders. We certainly work for our members and policyholders, but in addition, we work for our employees, we work for our communities, and they're kind of important, and I won't say one's more or less important than another, but it's certainly pretty important to us. You mentioned a couple examples like hospitals and, the climate lab. Some of that is more local and some of it's a little less local, has broader application across the country. One thing we recognize, and anybody who gets asked for money recognize, there are lots of opportunities to do a lot of worthy things. And there are lots of needs. And what we recognized, I think, is we needed to do a few of them well. Choosing them was kind of important, and we wanted them to kind of intersect with what we do from a business perspective. And importantly, that included the engagement of our employees. One, it's always fun to get input from your employees and right through the organization, because if you just ask the old geezers like me on the board, you don't get any smarter than they are. And, if it's improved, I think, our employees' view of whether we mean what we say on purpose. And also gives them an opportunity to express themselves on how the business operates. I think that's been really important. I think it's been a contributing factor in the high engagement scores we have with our employee workforce, and they get a chance to talk to us about what we ought to be doing and decide what we were doing and making donations and what the foundation does. And I think it's also extended to our distributors. Our brokers also have some participation in this. So those have all been important from a strategic fulfillment perspective for us. One other thing I would say just about climate, because people might say, well, isn't there self-interest paramount in that? Because if you're addressing climate, one of the things that causes claims or maybe increasing claims exposures are climate-related things like windstorm and floods and everything. And that's true, but the interesting thing as we analyze this a little bit more and thought about what we could do is that the intersection of climate risks and poverty. And so a lot of what we're doing that address poverty-related concerns really stem from exposure to climate risks, insurability and otherwise. So it's, there's a lot of things where I'm not sure we fully appreciate all of the outcomes that will come from this, but it's made us a lot more sensitive, I think, to how we participate in and contribute to our communities.
So, and keep that on that thread, Andy. Culture, we talked about the culture of Gore. It's central to Gore's identity in terms of who you have been as a company. How do you encourage employees? And I think this builds on this. You talk about spread the good or spread good in the ethos in their daily work, but it's also what the board's doing, what the foundation's doing, what the senior management, and how you partner with other organizations. And whether it's the hospitals, whether it's chambers, whether it's other not-for-profits, you're investing in the community in a variety of ways. But that spread good ethos, right? Like, is that unique to the mutual sector in insurance, or is that a specific thing that Gore has ingrained in it?
Yeah. By the way, I think maybe people have been, I won't say ripping us off, but you start to look at the local Y, and they talk about here for good.
Yeah. So they've been taking the spread.
So, and that's not knocking what they're doing at all. I'm a member and so on. But the whole thing about good and it has echoes.
Yeah. It's been fun to watch, and I think like going back, it is very strategic. That's interesting because we at the beginning of Next Horizon, we were saying, well, what is our differentiating value proposition? Like we're a 180-year-old mutual company, but we're a generalist insurance company. So it was kind of fascinating because when you do strategy, you'd say, well, if you're a niche player, then you could be small and niche. If you're a generalist, you should be big and have scale, which is where we're going to now. But one thing that jumped out at us, we said, well, actually, we're literally 180 years old. We're the first peer-to-peer insurance company, a true mutual, created by people who came together to look out for one another. So there's literally in our DNA. And at the time, we were all seeing that the world is falling apart around us, and our employees and people wanted to work with companies that were trying to make a positive impact in the world and not just shareholder-driven companies. So that was the impetus for insurance that does good. And we said, if we could modernize, to your question, I do believe it's powerful for mutuals because what we said, if we could modernize the value proposition of a mutual, most people don't understand what a mutual or a cooperative or a credit union really is. So we said, well, purpose is really it. Like we don't have shareholders. So at the end of the day, the work we do, the money that we make is invested back into our people, back into the communities, and we can make a positive impact. But if you could combine that with being a high-performing business, now you actually have a unique value proposition, and you can compete head-to-head against the big public companies. So then insurance that does good has three pillars: be good, do good, spread good. And that has really taken off. I mean, people just resonate with it and love it. Be good is really sort of how you show up every day. Do good is the work that we're doing with our partners to make the world better, and then spread good is the work that we're, how we're spreading good in the communities that we live in and work in. So for the employees, I think just building on that, just a couple of things. We have reinforcing Neil's comments. We've done Community Day specifically now for the last several years here and across all the communities, not only here in Kitchener-Waterloo, but we have offices in Toronto and Vancouver. So across the country, where we had over 500 employees out in the community working with over 40 organizations, giving back every year. And the one thing I would find in this whole narrative of spreading good and being a modern mutual, there's just a sense of pride that our employees have. And what I found is it's not the big initiatives. So it's not necessarily if we give millions of dollars to the just to a large to a large hospital or something like that. It's the smaller initiatives. So we have a matching program for our employees where they can choose, an initiative or a cause that they're truly passionate about. Could be a few $1,000s, and then we match that. But that community level giving is really important, and it's another area where we know there's really a high alignment with Beneva and the way that they actually think about communities. And so our view is combined, we have a bigger impact going forward in this area.
I think Josh Allen of the Buffalo Bills is stealing your thing too. He always says, "Be good, do good, go Bills." So take part of your thing. We don't want to get sidetracked on NFL playoffs here. Yeah. Listen, just as we wrap up, I'll ask a variety of the same question two different ways. We'll start with you, Neil. If you look ahead now and say you're on the board, you're chairing the board, you've gone through this process, what does success look like for Gore in 5 years or 5+ years? So 5 to 10 years is a window where you can say, here's what we plan to do. Here's where we are. What will for you constitute success for growth in this community in Waterloo region, but also there's other communities that you're going to be, growing into. Like how will you measure success from the board perspective?
Well, I think that we've got a lot of work to do over that period to properly integrate ourselves and create a cohesive national organization, and that's harder to measure. But I would say that if we're a top 10 property casualty company right off the get-go as a result of this merger, we will continue to build on that and grow. Nationally, we will probably go up the league table a little bit over that time, and I think that would be a measure of success. We don't want to get there and stand still and have other people grow faster than us. We really have an ambition to do that, and that will be replicated or mirrored in our employment. We're not only securing really good jobs in this area, we'll be building on that. We'll see more employment. Over the last 5 years, as Andy said, we've doubled our workforce. We doubled our revenue. We know we can do it, and can continue to do that in the days ahead. So what we've been doing is already a success. This is something that will fuel further success going forward.
And so, Andy, it's a version of the same. The proposed merger with Beneva and the impact on the region in terms of jobs and local opportunities. But that also translates in that what you are going to be measured on is how are you doing in other marketplaces and growing beyond the 8 or 10% that is here, in other parts of English Canada, and then Beneva, obviously, in Quebec and New Brunswick and the Francophone areas of the country. What does success look like for you on the operations side for you and your staff?
Yeah, it's a great question. I think having yesterday's formal approval is very exciting for us. We have gone through a process of getting Neil and I were fortunate to attend the Senate, committees for approval, the Parliament approval.
You enjoyed that?
And it was
actually, we make fun of these guys and say, "Geez, they look like a bunch of kids on TV." But honestly, I think we were both very impressed with the quality of the people we worked with.
That's good.
Yeah, it was. And then this week was the Quebec National Assembly. So now with that approval, we can merge in January, and all of our energy goes to integration. So I mentioned earlier, there's a merger kind of within a merger. So Unica is a subsidiary of Beneva today in Ontario, and Unica is going to merge into Gore. So next year, that's the integration, the near-term focus. So because we have the most modern technology platform, Unica will be coming onto our platforms, and we'll be spending next year bringing those businesses together. So today we're, as I said, located in Cambridge, Toronto, Vancouver. Unica's in Mississauga, but those employees will be integrating into Gore, and I think again our employment will be increasing. The real focus is get that integration done as quickly as possible next year, with maintaining great service to our brokers and customers, meeting our business plan, all the things we have to do every year. And then, as we say, if we can get through next year on that integration program, then in 2027, we effectively become Beneva, and we'll take on the brand and talk about work on some.
We could keep going all afternoon because I geek out on insurance because my old boss, Glenn Wright, had an pension benefits and was involved, and I worked at WSIB. So there's lots of insurance connections, and Neil and I share some history at WSIB. WSIB. But we do have to wrap this up. So this podcast is always about the business stories, the local business stories, but it's also about leadership and how people come to their philosophies or how they've come to leadership. And so I always have these rapid fire questions. I'm going to ask you the short answers, because especially since there's two of you answering these, but I'll go back and forth. So Neil, what would you tell your younger self if you could go back? I can't believe it's 50 years, but you claim it's 50 years. What would you go back and tell your younger self somewhere along the journey?
Well, honestly, I think if I was talking to my younger self, I'd say, I'd tell you some things, but I don't want to spoil the surprise.
Enjoy the ride. Enjoy the ride.
Okay.
Andy?
I think I'd say relax. I think most of us think each crisis is kind of the end of the world and we're facing and 2 days later life goes on and you power through it. So I think
that's good advice in all things.
Particularly.
I'll start with you. Who or what inspires you most and it doesn't have to be just business, but who or what sort of drives you or inspires you?
Yeah, I think probably a good underdog story. So I think that's something that's been our narrative as well, trying to compete against the largest in the industry. But anyone who's overcome adversity, a comeback story, to me, that's very inspiring. Yeah.
Neil?
Well, I'll just point to, I would say, my parents' generation, my parents, my aunts and uncles, and so on. But I'll give you a Gore example in that mix. There was a guy on our board of directors by the name of Bill McCormick. I went to his funeral just a few years ago. Bill was on the board of Gore for a while. He had a local business, the family business he ran for years. And Bill commanded the tank platoon that made the deepest penetration of any Allied unit on June 6th, on D-Day.
Wow.
And about 3 days later, he's in his tank and a German anti-tank shell goes through the turret and he loses a leg. All the time I knew him, he kind of limped around, but he never complained about it. He was a great guy. And that's a really good example of some of the people I've had the privilege of working with over the years. So,
no, that's a great one. If you weren't in your current career that you're doing, I'll start with Neil here. What do you think you'd be doing instead? Like, you've had a long career in finance and audit, et cetera. But if you weren't doing that, what do you think you'd do?
Well, it's funny at this point because I'm technically retired, although my wife puts air quotes up every time I say I'm retired. I'd like to say it was something extravagant like being a mountain guide or a ski patroller or something like that, but I don't know what I would have done any differently now.
Well, you seem to have enjoyed it. If you stayed in the industry for 50 years, there's probably not much else you want to do. Andy, what about you?
Well, now with our office in Toronto, I find myself driving into Toronto a lot more than I used to. And with the traffic, I literally park at the airport and take the Up Express train. So I've been kidding with Aaron lately that I think my next career is airport limo driver.
Airport limo.
Just go. I'm getting so efficient.
Well, and you have kids, so you can also Uber driver or an airport limo driver.
I feel like I can chat with
very
people.
Experienced at it.
I'm getting very good at it. Yeah.
Okay. Are you
Greek fisherman cat for you?
Are you reading a book or listening to a podcast? What do you do?
There is a book. It's actually it's called The 4 Seasons of Being a CEO. It's quite interesting. Kind of takes you through spring, summer, fall, and winter. Sometimes it always feels like it's winter, but it is quite fascinating, the journey that you go through. And now that I've sort of finished 5 years in this role and we're doing the merger, it's really an interesting one. Yeah.
What about you?
Well, I just got Margaret Atwood's autobiography and thumbed through it a little bit and certainly recommend that so far. But there's a suggestion for you on podcasts because you were talking about being a bit of a techno geek. There's a guy called Azim Azhar, has a podcast called Exponential View. He's out of London, but it's a Harvard Business Review related one. He does a lot of things, but great guests about technology issues. So that'd be a good one.
Well, I need lots of help on that. I say I don't know much about it, but I should know more about it. But okay, just as we wrap up, what's your favorite business that or local place that here in Waterloo region?
Oh, for me, every Saturday morning I go to a little place across from the old City Hall and old Fire Hall in Cambridge called Disco Coffee. And I'll see if this gets me a free coffee.
All right,
but they have really good coffee and I can get Financial Times there, so that's good.
Well, similar. I mean, our neighborhood, I find myself buying very expensive olives at Vincenzo's.
Yes, Vincenzo's
on the weekend. So I think that's probably near and dear to my.
It's a great place, and it's close to because we're neighbors in the neighborhood.
That's right.
Okay, just as we wrap up, Andy, where can people, listeners, those that are watching the pod or listening to the podcast, connect with either Gore or you if they want to follow up on some of the things? Because there's lots that we touched on a lot of things, and there's a lot more detail to
100%.
go through.
Well, first, appreciate you giving us the opportunity to tell the story today. And as we go forward, so we definitely have our website that we'll be updating. Social media is a big area for people to watch. And then what's even more interesting for us is if we take on the Beneva brand and we have a national presence, I think you'll see a lot more of Gore and Beneva in the marketplace than you would have seen in the past.
Well, the platform's already here, and I know Greg at the Cambridge Chamber, we talk often about the importance of Gore and as a business, but also we're delighted to see the progress that you're making. So really appreciate you both making, and I think as we record this, we're in one of the 3 snowstorms we've already had in December. So thank you for making the trip down here. Really appreciate you both spending some time with us today.
Okay, well, thank you.
Yeah, appreciate it.
Thank you for joining us for another episode of Behind the Business, proudly presented by Gore Mutual, insurance that does good. New episodes drop every Thursday, so be sure to tune in next week. You can also visit greaterkwchamber.com to catch up on past episodes anytime. We'll see you next time as we continue to go Behind the Business.